Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn the bell notification so you get notified each time I upload a new content. Try to like and refer this channel to a network so that YouTube pushes to a higher level of audience. In today's video, I'm gonna be telling you something, I'm gonna be teaching you something that is very powerful. A lot of people are missing opportunity simply because they cannot understand this idea. The topic is left right hand rule of price movement in forex synthetic market. Okay, you know that actually price move from the past to the future. Price have to move from, this is the left and this is the right, and price have to move following some trajectory into the future. It does not move, it actually follows this kind of trajectory. It doesn't follow this trajectory. It doesn't move from right to left. Okay, it doesn't move from right to left. It moves from left to right. That is the left right rule. Okay, so when price is moving from left to right, it follows some sort of trajectory. Okay, it follows some sort of trajectory, you know, some sort of trajectory while moving from left to right. Then it has critical point. Market will always create some geometry. So we will actually have something like this. Market will actually market will actually do something like this. Okay, this is an arbitrary price movement to the upside. Market can as well do something like this. Okay, let's get it right. Market can actually do something like this from the left into the future. Okay, now when price is doing this stuff, is breaking levels, it's actually breaking levels, the left right rule says that if market break level, it first of all reacts to the nearest broken level from the left before it will try to react to the next broken level from the left. I'm going to explain this shortly in the MT5 practically, and then I'm going to end this video because this is a short course. If you have been losing money trading and you are not actually making it in this industry, make sure you enroll for our mentorship and courses. Make sure you subscribe to our VIP signals. The truth is, you need to leverage the effort of successful trader. You have to copy our trading rate time, copy and paste our trading rate time, and make money each time we place trade. Each time we release signal, you make money. Right now, I'm going to the chart. So this is a synthetic indices. I will also include forex market in this analysis. So let's open volatility 75 index, and now we are going to be in the 1 hour time frame. We're going to be in the 1 hour time frame, but to make it more easy to understand, let's be in the 30 minutes time frame, because that is where we can see all the reactions. So we have a market that follow this trajectory all the way from top to the downside. Okay, now what the left right rule says, that the left right rule says that if the market break a level, while flowing from left to the right, because this is always conventional direction, left to the right, okay, then the market have to respect the nearest broken level from left first before it will make decision, before it will think of doing anything else. So it have to come and respect here So when you extend this broken level, you see that price have to come and respect here first. So you see that reaction. So as a scalper, you can just be trading these reactions. So you see that automatic reaction, or AR, automatic reaction. Now, after that, we also have another automatic reaction to the same level. So that could be multiple reaction to the same level, but the first reaction, which is the zero reaction, is very, very important. It's very, very crucial. It must happen. It's sure. So we have zero order reaction, then first order reaction, and other higher order reactions. Okay, but the zeroth reaction and first order reaction are the most sure reactions that you must look for. The second, the third might lead to fake out or breakout or change of character. So you have this thing, this one. You see that when the price starts going up, instead of respecting this level again, it break it. Why? It is attempting to go and react to this order block. Okay, so these are liquidity reactions. Okay, market wanna go and grab liquidity from where there are presence of money. So where are these liquidity pools or zones? Are places, examples of these pools or zones, liquidity pools or zones, are places where there are broken levels, there are price ranges that were broken, like this one, or other block where market just start changing direction in form of retracement or impulses. And so this is what is happening in this market. Okay, but the order at which this reaction happen is from left to right, and they are going to follow this order. And what is that order? The order is they are going to respect the most nearest liquidity zones, the most nearest broken levels, the most near, like the most the most nearest, before they think of any other thing. So I'm going to give you more instances. We have a market that follow this trajectory all the way from down to the upside, and then let's start marking the broken levels. So we have market break this level. Okay, so it break that level, but see what's happened. It break that level, but why it break this level, it also have other internal break of structures like here. Okay, so when you are observing this market from the left to the right, so what are you going to see? So we have a market that broke this level, and what happened? The market fly to the upside. The way it is coming to test this level is not going to come on a straight line, but is going to follow the left right rule to come to that level. Okay, so in following that rule, it is searching for any break, any nearest, as it is moving from left to right, it is searching for any broken level, any liquidity zones. So here the market break out of here, so it have to pull back first to test this nearest broken level before it will continue going down. Okay, it can, you see, it pull up as fast as possible and react, create that signal. The reaction is a signal, okay, and it is always in the direction of the breakout. So this is a self signal because the breakout was downwards. Now from the left to the right, it also reacted to that broken level, but at this time it did not respect the broken level. It traded above the broken level. That is to tell you that every zeroth reaction are going to respect the level from left to the right. Okay, they continue like this until they get to this level and then respect this level, and then the market break out of here. So what from the left right to what do you expect? It have to react to the nearest broken level. So it actually reacted to this level because it is the nearest. It reacts. Let's remove this now. So it have to react to this level, even though it didn't touch it, but we saw that reaction happen. It reacts. Then when it reacts, it continue going up because the breakout was upside. So the reaction here is what you should have traded in form of buying, and then the market fly and come here, break another level, the market pull back this is a zone's order reaction. So that zone's order reaction is meant to respect that level. It's not meant to break it. So the market fly. So when the price is coming back to this level, it attempted to react to it, but it couldn't touch it, but it still fly. That is to tell you that if zone's order reaction has been attend or have been executed, every other reaction might have noises in terms of actually reacting to that broken level. It can have noise in form of trading against the broken level or reacting to the broken level but not touching the broken level. Okay, thank you. Make sure you keep subscribing to WINFX Trading YouTube channel. Make sure you are proactive. Make sure you do the right thing. Make sure you invest with us. If you cannot buy our signal, if we cannot enroll our courses, make sure we actually do a lot of account management and we have the best results. And if you cannot have money to invest, you pretty much need to refer others, and we pay you commission, about 30% commission. You can make as high as $1,000 plus $10,000 plus in a month if you work as our ambassador. Thank you and bye for now.